Hi folks, looking at Ethereum on an intraday chart, we can see a price congestion in the making that resembles a wedge pattern within a larger breakdown from the August highs. This pattern usually presages further downside continuation. But is it really a wedge? Well, it is, but only in its form, in its anatomy. What do I mean by that? We need to contextualize the pattern to generate a trade idea with a minimum of substance. In our first attempt to contextualize it, we noticed that last summer, 2022, there was already some price acceptance below current levels. So, nominally speaking, we are still at higher prices. This doesn't fit well with a bearish continuation pattern. We need to erase all the gains achieved since the July lows to build a stronger case for a serious price deterioration. Second, we extend the lines that form the pattern, and we begin to notice the so-called wedge is just a congestion within a larger structure. Do this every time you find a triangular shaped pattern. Extend the lines and copy and drag the triangle's lines so that you get at least two channels, one ascending and another one descending. So if we keep copying and dragging the lines to other significant places on the chart, we discover a whole new context. What I mean by significant places, I will tell you in more detail in a future video. So subscribe to the channel if you haven't. It's free and you can always unsubscribe if you don't like it. This is how it looks like after the wedge's floor was broken as a reaction to the better than expected CPI numbers released last week. The price reacted to the parallel line to the wedge's sailing and retracted back into the congestion area, leaving the downside channel intact. We can conclude from this analysis that while we are trading at higher nominal levels than in summer 2022, tactically we are at the same levels, that is, on the precipice of a multi-year support. This also means we don't need further price deterioration below the summer lows to imply the floodgates have been opened for Ethereum to be traded in the sub-thousands. This becomes clear by looking at the bigger picture. Despite downside threats, the price is still glued to an ascending channel upper border, marked as a green area on the chart. This upward sloping belt is buyer's territory. Only below this structure it would become dark for Ethereum. Notice the red circle area. And even then, Ethereum would still be trading within a secular ascending channel. As a side note, notice how intact the descending line on the RSI still is. Hurdling this line on the weekly oscillator would signal animal spirits returning to Ethereum. I'll keep you posted on that in future videos. That's all I got for you today. Wish you a green week. Cheers. See you soon.